not like, ask me when I'm going to sell it. Never. I'm not going to sell it ever. And so the narrative has rotated. Long-term, institutional, deep pockets, and the asset class has matured. And of course, the law of large numbers say a $1 trillion entity has more inertia to it than a $100 billion entity. And what do I expect to happen? I expect it will grow aggressively toward gold, and it will flip gold, and then it will demonetize gold and subsume gold. And probably it'll be first $10 trillion and gold is 10 trillion. Then it'll be 20 trillion and gold will be 5 trillion or 4. And gold will eventually become an ornamental metal. Bitcoin is going to suck the monetary energy off of negative yielding bonds. I ran a survey on my Twitter. I got 65,000 responses 2 days ago. I asked people, where did the money come from you used to buy Bitcoin? 49% is stocks, 20% is gold, 10% is bonds, 19% is property. Basically, stocks are going to be negative yielding if you're value stocks because they can't keep up with the rate of monetary expansion. Everybody knows bonds are destroyed. Ray Dalio just told the world they're all negative yielding. By the way, he thinks they're negative yielding versus CPI. The real point is they're negative yielding versus the cost of capital or the rate of the monetary supply expansion, which is like 15 to 25% a year. They're screaming value destroyers. So I think that Bitcoin goes to 10 trillion and it goes as fast as it can, and then it grows 50, 60% a year toward 100 trillion, and it slows down from 200 to 150 to 100 to 80 to 60 to 40. You know, you saw Google and Amazon growing at 20% a year off of large numbers consistently for the past 5 years. I think when it gets that big, it'll be growing 20% a year, and eventually it'll subsume the total addressable market for treasury assets, and then it will be growing at an organic rate, 5, 6, 7%, a fair cost of capital. Bitcoin is the world's best treasury asset. It's like 100x bigger than the next thing. The risk is 1,000 times less than the next thing. The addressable market is 100 times bigger than it is right now. It's its own thing. Everything else in the crypto universe is venture capital. If you have a venture capital portfolio, if you have the wherewithal to invest in crypto ventures and you want to study it, well, in my opinion, they have 100x less addressable market and they're 100 times more complicated. But if you want to do that and you have the capital to do it, have at it. If what you want to do is just buy a bar of digital gold and wait, I mean, Bitcoin is better gold than gold on a big tech network, right? It's just, you just buy a bunch and you wait. Okay, well, first of all, we've got two strategies. One is we run enterprise software and we make money and we love it. And we've been in the business for 30 years and our customers need us and we're good at it. It just happens that we're not growing 200% a year, right? But there's no shame. By the way, are you going to disband your family? And none of those sports teams make money, but like, so why even like own a sports team? The answer is because you love it and it's a beautiful thing. And if it's not, no sports team grows 200% a year either, right? So here's the real existential issue, right? If we get rid of everything on Earth that isn't growing 200% or 100% a year, or it isn't growing faster than Google and Facebook, there's not much left in the world, right? So we have two strategies. One is we're going to buy and hold Bitcoin, and that's a 200% digital asset network growing, and we love it, and we made a lot of money. We made $3 billion doing that in the past 6 months. But that gives us the ability to do the other thing we love, which is create great enterprise software and to continue to sell that and grow that. And just because the two businesses don't grow at the same rate doesn't mean we don't love them both. And there are a lot of synergies to actually having an operating company that's that has a P&L strategy tied into a balance sheet strategy. So we're going to keep doing them both. We're happy about it. And by the way, it's a lot easier to do the enterprise software company when the stock is moving up and when every customer in the world knows who we are. It's helped our marketing, it's helped our customer relations, it's helped our employee relations, it's helped our recruiting, and so they're very synergistic. I think the single most important thing you can do is estimate the annual rate of money supply expansion every year for the next 8 years. And if you think if that's 15% going to 10, going to 5, going to 2, going to 0, then you're going to stick toward a traditional portfolio. But if you think that money supply expansion is going to be 15% consistent, then you got to go to scarce assets. bottom line is, I don't think bonds or real estate work as a store of value and in a monetary inflation environment, because they're both, one of them's a coupon and the other one's pegged to CPI or capped at CPI. I think that that value stocks are, you've basically got to invest in an index of equities that are going to grow, or you got to invest in scarce assets. And if the growth rate of the money supply is 15%, you better find a portfolio of equity that's going to grow 15% or better if you're going to store value in it. Otherwise, I would invest in trophy assets. Buy your house on the beach that you want to live in the rest of your life, because that'll always be valuable to you. With leverage, I think you buy scarce digital, probably like Bitcoin. You buy things that are absolute. Buy something that a rich person is going to want to buy from you in a decade. Ask yourself that question. I'm not buying your New York municipal bonds yielding 2% in a decade, right? And you're going to get a negative 15% real yield. So I would think in terms of that: trophies, equities, and then scarce assets. And obviously, I'm biased. I think Bitcoin is the best property in the world. Figure out what your risk tolerance is for it. Buy that much of it, and then diversify the rest across other things and you're comfortable with.